Oil prices slipped in early trade on Monday due to sharp price cuts by Saudi Arabia and increased output from OPEC. These factors offset concerns about escalating geopolitical tensions in the Middle East. Brent crude fell 9 cents to $78.67 a barrel, while U.S. West Texas Intermediate crude futures shed 10 cents to $73.71 a barrel. Despite these price cuts, both contracts had climbed more than 2% in the first week of 2024 due to geopolitical risks in the Middle East. U.S. Secretary of State Antony Blinken warned that the Gaza conflict could spread across the region without concerted peace efforts. However, Israeli Prime Minister Benjamin Netanyahu vowed to continue the war until Hamas was eliminated. On the other hand, OPEC's output rose in December, and Saudi Arabia cut the February official selling price of its Arab Light crude to Asia to the lowest level in 27 months. Despite these factors, geopolitical tensions in the Middle East are undeniably rising again, which will limit the downside for crude oil prices. In the U.S., oil drilling rigs increased by one last week, with J.P. Morgan forecasting the addition of 26 oil rigs this year, mainly in the Permian during the first half of the year. The timing of drilling is crucial as it will contribute to production growth in the second half of 2024. Despite impressive production growth in 2023, the bank expects supply to increase by only 400 KBD in 2024 due to lower completions activity levels compared to 2023.